Hey guys, so we saw inflation come in slightly hotter than expected. That's why stocks in the solar sector are getting hit right now. Like First Solar's down 8%. Pretty much anything in the solar sector is down today, okay? So in the IWM, which tracks the Russell 2000, the small cap stocks is also down. So this is what I was giving you the heads up on yesterday, because obviously when inflation's higher, that means less of a chance for more interest rate cuts, which affects the small cap interest rate sensitive stocks. So always remember that, guys, okay? Obviously, when we do start seeing weaker than expected data, then that will help the small cap stocks. But it can't be too weak, because then people start thinking recession, right? So that's why it's threading a needle right now. But that's why I was saying the focus on the QQQ, the NASDAQ 100, and the semiconductor indexes, because those are off their highs still, right? Whereas, the SPY, which tracks S&P 500, is at highs. It just broke out again to all-time highs, all right? So, but I always like to look for undervalued plays, ones that are off their highs. And right now, QQQ, stick to, the mega caps at the moment with inflation coming in hotter than expected. Because remember, these companies don't have to raise capital, so it doesn't matter if interest rates, don't come down as quickly. And like I said, they have plenty of cash to reinvest, so the Amazons, even Google, guys, I've gotten some questions on this. Historically, these have been great times to buy the stock when there's antitrust regulation, when they're trying to break them up. This happens every couple of years. Remember, they go after the big dogs, right? They get their money and then they leave them alone for another couple of years, and then it happens again. But I know this one's more serious, where they're trying, label Google as having a monopoly on search and breaking up the company. But just know, if the company ever does get broken up, which I don't think will happen, but if it did, that actually benefits investors, okay, is what I'm reading. So it's 15% off of its highs right now with Google. So if you're buying these long term, like I said, in this environment, if reinflation starts becoming a thing, then you want to own these companies, right? Also dividend stocks, right? More safety. All right, we've talked about that. And like I said, China, I understand a lot of people don't want to touch it. That's fine. But there are some undervalued opportunities, with mainland China stocks, right, that don't have ties to the US. All right. So those are some areas you can look, but I just wanted to point that out. The mega caps, tend to outperform, right, when inflation starts going up. A lot of these companies will pass on, right, these costs to the customer, as we know. And these stocks went up big, right, when inflation was going higher, right, in all of 2023. So just remember that, guys. Protect your profits here. That's what we want to do. We're going into a historically weak period in October. So after we clear through, right, Tesla's robotaxi event, AMD's AI event, then we get into bank earnings. The narrative can change, right? And if we do see some more reports showing hotter than expected data, that's not going to help with interest rate cuts, right? In the future, there'll be less. So again, that could put a pause on things. So wait for opportunities, guys. There usually comes great opportunities when you're patient, especially in the month of October with an election coming up here, right? You will, if you're just sit on the sidelines, that's fine. You can be in cash. Like I said, be in dividends, whatever you want. But wait for great opportunities, guys.